What's up, guys? Let me just see, turn the desktop audio down. What's going on, guys? How's everybody doing? Give me 1 second to turn this off. Turn desktop audio down. Let's get rid of the, no, we don't want to do that. Cancel. Turn off Spotify. There we go. How's everybody doing? What's going on? It is 1:06 p.m. New York time on Friday, the 11th, right? So I got the ponytail. As you can finally see, it's getting long. Got the hair pulled back. I'm serious. My hair looks absolutely insane. So, all right. Let's make sure that we are loud and clear. Just give me some feedback. And move this little. There we go. Let me move me. Yeah, sound is good. How is it, aside from being audible, is it, you're not hearing the robo sound, right? It's just my voice, right? No robo sound. Want to make sure that we have this good from the start. Otherwise, I'll go into a tangent. We'll go into, we'll segue into something else that's, okay, preempting the question. All right, let me pull the chat over here. Pop out the chat. Okay. All right. What's going on, guys? What's going on? All right. Looking sharp. Got some. Put this right here. Say hi to everybody. Cornholio, what's up, man? First comment. Guess what you win? Air. Air. You win air. What's going on? LP. Bob Smith. David. Hi. Keld. Dave. What's up, man? Doug. Dog's playing with a fucking ball upstairs. Cassiel, Kilgore, Thorson, Youssef, Jason, Crypto, Stan, what's up, buddy? Stan, I appreciate you doing a giveaway, man. I really appreciate that. Michael, Sigmar, Coin Chaser, looking sharp, looking sharp. Yeah, the sweater and the ponytail. That's my go-to. It's really funny. I was thinking of this yesterday. No distortion. Good. No robo. Okay. So I was thinking of this yesterday. I always had a very short Virginia Beach. Nice. I always had very short hair. I always had a shaved head. Like, I looked like, my wife would put it, a character out of Prison Break for a long time. Now, most of you probably can't imagine me looking like that. But yeah, I was the dude who had the military haircut for years, buzzed all the way down. So probably hard to imagine me looking like a character from Prison Break, but that's how I looked. Okay. I have some visible tattoos, so it kind of fit the part. I got the swole going on. So I was my wife would say I was a menacing looking person when she met me. As soon as people get to know me, they know that that's not the case. But so I wanted to always grow my hair out. I always just wanted to let it grow out. But I have really thick hair. I am a background of Sicilian, Calabrese, and Greek. So I have really thick hair. And when my hair grows, it doesn't fall down. It grows up. So for those of you that are familiar with the Chia Pet, remember the pet that was sold on the infomercials, like little porcelain stone doll, and you water it, and the greenery grows out of the whatever it is, vegetation, whatever grows out of it, grows out of the top, and it grows upwards, and it looks like a troll doll. And so that's how my hair works. So I would always want to grow my hair out, but you grow your hair to a certain length, and then it's in that awkward stage where you can't leave the house the way that your hair looks, right? You can't just roll out of bed and be like, okay, I'm ready to go. It's great to be someone who works from home and never really has to deal with that, but still, there is some kind of awkward stage. Now, I'm at the stage where actually I have so much hair, and you can't tell in the videos because I can see how it cuts it off. Now I have so much hair that when I wake up, it falls down. So I'm like, I made it. I made it past the awkward stage. And now, the way that I am about my hair is like, this is the weirdest thing. I feel like people can identify with this. And now I identify with all of the, women in my life who have had really long hair. And they, when they decide to cut their hair, they're like, damn it, I cut my hair. There's no, it is just one way from this now, right? It's going to be either wait a really long time for it to grow back, or it is what it is, right? So I am very much, I threw my hat over the fence and I'm never going back. I don't see a reason to go back for a while. So until it gets kind of crazy, we'll see. But I don't know if I'll ever have short hair again. So we'll see. So on behalf of myself, my name is Ryan, aka Kennering Clark on Twitter, and my partner Josh Rager. Obviously, we want to thank everyone for tuning in to the BlockRoots live stream. We do this every Monday, Wednesday, and Friday. Friday's time seems to be a little bit tentative. Sometimes it's at 12, sometimes it's at 1. Fridays are casual. I guess I suppose I have to have some consistent time if I expect a consistent viewer base. But, we do this 3 days a week, and sometimes we throw streams in between there, right? Mondays is, kind of disseminating what occurred over the weekend, breaking down maybe news stories, developments, looking forward towards the beginning, from the beginning of the week, maybe expectations, what they are. Wednesdays are strictly, for the most part, I'd say 90% BTC, 10% the rest of the market. And Fridays, I hate to steal one from my buddy Cred, but Fridays are more casual, right? So I think he has, I think it's Casual Friday. And Cred's stream, as I've said many times before, is one stream that I really love to listen to. So this stream is pretty casual. We're going to go into obviously some things that I think are important right now, but we're going into the weekend where it's like, if things have not happened clearly right now, then maybe expectations are a little bit dimmer moving forward until Monday, because we do see that obviously weekend activity is sparse, it drops off, and I'm going to look at Genesis volatility to show you how you could sort of see what times of the day, what times of the week, maybe you want to be more active, or maybe you should just be more present, because the worst thing with trading is to be stuck in front of the screen and not really have any kind of idea as to when it is the better time to be in front of the screen, right? There are reasons why traders create filters, right? They have filters for if you're trading, stocks, whether it's by things picking up in volume, volatility, relative volume changes, breaking above a specific level, prices back above the 20 period. All of these filters are that you could set as criteria are just really ways, if you think about it, put it this way, that you could actually free yourself up from the screen, right? But when people get into trading, it's very hard to stop being interested at what you're looking at and break away from that. You only become able to do that when you have, when you know what your business hours are, right? I know when my optimal business hours are, right, for specific setups. I also know that at any given time, some of my more nuanced, I guess more idiosyncratic setups that are very specific, they could pop up any time of the day. And those are, for the most part, you're going to find that those are scalps, right? Those are short duration trades. But either way, going into the weekend, things kind of thin out. When things thin out, it's actually easier to move the market around. So going to the weekend, it's not a matter of price not moving, okay? Because you have to be careful, because there are some days where the return on the weekends, or some periods in the year where the return on the weekends might be higher, and that's because it's actually easier to move the price because there's less liquidity. But the idea is the market might be yielding more in that period, but the caveat is it's a period where you might want to take less, take less risk, right? Because the market is thinner. It's going to be a little bit more slippery, maybe size down a bit, or maybe just be completely inactive. So going into the weekend, so we're going to take a look at things right now and how they're closing out, because that's ultimately what we're going to have today. Close of traditional markets, we're going to have the CME close, and of course crypto native exchanges are going to be running around the clock, but we have seen that there has been a lot more activity in those normal business hours, we'll call them, of traditional markets. So again, on behalf of my partner, Josh Rager, just want to thank you guys for tuning in. If you're not subscribed, right, just make sure you hit the subscribe button. I hate to go over the sort of, bullshit pros in the beginning of, make sure you hit subscribe, make sure you hit the like button, but it is what it is, right? We want to continue doing these YouTubes. I wouldn't say that that's a contingency, right? So I know a lot of people say that whole shit in the beginning about, we want you to like the stream because we want to keep doing it for you. And it's like there's this sort of, there's this reward system. And if you don't get likes, you're not going to keep doing it. I'm going to keep doing the stream, right? I'll do the stream if I have 20 people. I'll do the stream if I have 20,000 people. And the idea for me, or the thing for me, is I have a lot of time in my hands. I used to golf like 5, 6 days a week for many summers. And I would play golf with the same traders, right? I played golf with the same traders actually at my home course. A lot of bond traders, honestly, which is pretty interesting. But they would get out very frequently during the day, and they'd say, "How the hell are you always here?" And I would say, okay, so not only is it fantastic that, I have my own book and I'm basically trading for myself and at the time also trading for other people, but guess what? I also have a wife who is very active with the horses, right? So the best thing for a golfer to have is a wife or a significant other, obviously, who has a hobby that takes up a good portion of their day as well. So doing the YouTubes for me is nothing because I used to spend 4 hours a day on a golf course, right? I looked at the day and I'd say, okay, that between those 4 hours, right? And obviously I couldn't just do this all the time because it would have to be in certain conditions where I wasn't as active in the market. But if I could block off 4 hours, I could block off, an hour for a live stream. So I'll continue to do these, but we do want to get likes. We do want to get new subscribers. It is a good it's a natural, feedback loop that exists in everything, right? So it's like a high five and you do something well. That's what the digital version of a high five is. We get those likes up. So we have a good amount of viewers right now. We have a decent amount of likes, but the like to viewer ratio is it's a little ugly. So if we could go ahead and improve on that. Otherwise, we will go ahead and start the stream. Right, and if you're not subscribed, I think it should be right around here. There should be a BlockRoots B, right? Or if it's like that, I'm not sure. I don't want to throw up gang signs. I don't mean anything by that. But go ahead and click that watermark and you can subscribe to the channel. Okay, so it is Friday. Always starting with context, important levels, and positioning, right? So in terms of important levels, I have my local levels mapped out, but this structure on the higher time frame, the one thing that the eye always wants to do, or that a person always wants to do, and this is one thing, part recency, and then just force a habit for people to look for patterns in nature, is to look for patterns in previous price action that's similar to this, right? We are pattern-seeking creatures. It has helped us survive over time, okay, in more ways that are interesting than, looking at a chart like this. If you want to read a really good book on maybe paleoanthropology and things of this nature, then read the book Lone Survivor, right? So not Lone Survivor, the book about Marcus Luttrell, but Lone Survivor. It's a great book. It's got a big skull on it. I used to be really into paleoanthropology. So if we look at previous tops, you could see there's sort of this uncanny similarity between what we have right here, right? You had more overthrow on this structure, but you have this sort of, for this daily low that's breaking this 1-2 sort of punch down to the low, but the main point is that we haven't taken out this low. So for anyone who's still really hanging on to these lows down here being revisited, I'd like to just draw your attention back to this period where you had this longer term roof, okay, breakout, and then we didn't come all the way back down to the meat of the structure and revisit it. So we have this sort of similarity between previous structures, okay? I went into something, I think it was yesterday on the private BlockRoots stream, where I was talking about how what we can have is something that's actually similar to this, where you do build a range, but it doesn't occur between the first high and the first low, where you do get a breakout, you get people overly confident again, and then you dump back into the prior range, and this takes place over the course of, a month or two, or in this case, this took place over the course of, a month. But the entire bias of the market has not changed, or maybe the bias of some maybe the bias of some has changed. But I think that in terms of market structure, you haven't done anything really. What we're doing right now is, a lot of people are focusing on, and I'd like to just draw your attention to this because you hear, daily level, daily close, daily open. What is it? Is it all daily closes? Because you just have one of those after every other day, right? After every single day. So, you heard me focus on, okay, here's your daily low. You have to remember that a lot of this is in terms of recency, right? So we're looking at, okay, daily low here, the daily low's high, the daily highs up here. We have a very clear area acting as resistance, more locally, the area acting as support. But in terms of the higher time frame structure, the most important daily low is where the market, dumped into and reversed out of very violently. So major pivot point, and that's still below us, right? So in terms of higher time frame market structure, I've kind of been beating this drum for a long time. I'm most interested in the really, the early low that we put in that's a significant low, right? Significant low. It's not just yesterday's daily close that, we drop below, right? Because that's not really it is a swing low in the sense that for that daily, for that setting, that periodicity, that's where the day happened to close out, right? But this is where the day actually, had a good amount of activity, came into violently, and this actually stood as support. So I think that more significantly, you have to look down in the low 17s, high 16s, okay? Which, again, in previous structure, you had the initial very violent daily low that was put in. You could even say that this one was maintained. And then on the way up, right, for the duration of the rest of the structure, what do we do that you do in markets? This is the puke point. So you bring the market into this point violently, and you never bring it through because you don't want to compromise maybe the integrity of the structure. It's not you don't want to compromise if the market is this thing that has, one conscious and is making these decisions, or is one person controlling it. But it brings it to that psychological level over and over again. And this level is a very important support. And unless it's broken, it still is, right? So it doesn't make sense for me to prioritize talking about, your 14.9 or your 13.8 or your, 12.2. And those are just off the, just quickly looking. It doesn't make sense for me to talk about that yet until we break this low, right? It just, in terms of that bandwidth that I am taking up, I'm just gonna let that I'm gonna let that stay out of my I don't know what the computer term would be, my RAM or whatever, random access memory, who knows. I'm always trying to come up with I guess they're pretty ridiculous sometimes if I don't have the background and can't pull it up, but something that equates to something else. So let's see, making an analogy or whatever. So this right now, in terms of our higher time frame market structure, yes, so context-wise, bullish trend, right? Low has been maintained. The most significant low, I would say, yes, we put in a higher high, fell back below the prior structure. So what are we always anticipating after we have some level of value overlap? Well, we're anticipating that we have a range built, right? So if we go back to the beginning of the structure, one of the signs is, again, you make a move up to the high where you have value migration, and then you start to have value overlap. So all these value areas are beginning to get confined into a very tight area. So you'd say, all right, that's where value is developing. That's sort of fair value for that period. What I would say most importantly right now is that, yes, we did have a break from this structure, but we haven't broke the most significant level. So these are really good for intraday setups. But moving into this low, the one thing that I really want to pay attention to are my higher time frame signals for positioning, right? So things rather that I wouldn't say they're signals as much as they are things that I'm interpreting over time, but I want to see that into the low that we get that really bearish environment, right? And so we're actually starting to get it. So one of the signs that the market was getting overheated was that futures were trading at a consistent premium. So whereas you had a spot-driven market the entire way up, well, it got really detached right around here. So from right around here, we started to see that futures really started to pull the rest of the market, or it just took the lead. I wouldn't even say they can't pull, right? So the spot bid stopped and the futures bid continued, and that's just where you have your leverage products and you don't really have that, I guess, organic demand. It's not the spot asset, right? It's a derivative of it. So you see that in something like the premium index, in something like the Coinbase basis, and when this is trading lower, it means that Coinbase is trading lower, that there was that overwhelming presence in the futures market instead of the spot market. So what you want to see in the pullbacks, besides things like delta divergences and, big wicks and, supports holding up and price action is springy, I want to see that we're getting the betting in the opposite direction, okay? Because that futures activity, ultimately the squeeze does help when you have a major move in the opposite direction. So I think the one good sign is that on the higher time frame, on the daily, you are trending south. Right, so in terms of the premium index, which is just a derivative of basis, so this is pure basis, this is premium index, that incorporates an interest rate component. This is trending south, which I think is, if you look at how this has sort of progressed over time, okay, this is where we begin to ideally, and you can see it occur in the low time frames, you start to see a very different story than we've seen more recently at the highs. Okay, so you're only going to get this when really price is selling off or neutral. So we'll take the fact that it's selling off, but it's great if you start basing out and you maintain this. So if we continue to base out, so we maintain this structure, All right, even if I'd be willing to even say you go down to 17.2, 17.4. All I want to see is that while we're doing this, price is not skirting to the downside, right? You want to see that price, whether it comes, let's say it comes back into this low, that again, it's the prevailing trend for this is, if you're drawing like a regression through it, is something like this, right? So it is not, steeply falling off of a cliff. Instead, it is beginning to base out, right? You have a series of, you have a lower low, a lower high, you got this intermediate structure, lower high, you have a lower low, but in terms of the intensity of the move or the magnitude of the move compared to the prior, you're beginning to see the momentum is shifting from, heavy intensive move to the downside to potentially flattening out. And when you flatten out and you look at this and you have other factors as well, like, okay, so we do have this uncanny similarity of how these structures have all played out over time. Okay, we do have support that is stacking up. Where would the market, puke the most or get most concerned? Well, it would get concerned the closer that we get to the significant level. So not all traders think, and majority of participants don't think the way that, some of you guys do, some of the better traders do, where they know that this sort of behavioral dynamic occurs at these levels. If people are going to, you'll see it on Twitter. It's like the market moves lower and people are like, oh my God, this is really bad. And it's like, well, yes, it is. It was bad, right? The market moved lower already. Okay. So, skate where the puck is going. Okay. Not where the puck necessarily is. Okay. So if we already moved down to the low, well, yeah, so we're back down at support. So the risk reward at this point is maybe skewed back to the upside than to the downside, right? So, you have people that get bearish after the move. That's my point, right? They weren't talking about it being bearish up here when it was being rejected as much as they're talking about it when it moves lower. So it's obvious you're just making an observation at that point, okay? So you have to take advantage of that, right? The market takes advantage of that. Moving into this low, you're going to get a lot of people bearish, and ideally you see that something like the funding rate, this is showing great signs right now. It has been flickering on and off as negative, but for the most part, predominantly neutral. So most part neutral, okay, but we have these sort of brief periods where it has gone negative. And this is exceptional because this means that you do have a ton of aggressive shorts opening. They're paying to be in position. They're paying that interest rate component every 8 hours. And you would want to see that this begins to accrue over time. So if you have this structure, what is best case scenario? Okay, so what's best case scenario? Move into the low, you have a spike here. Maybe we even make a second spike towards this low, but you have a structure that begins to form and you're clearly seeing it's rounding out. You clearly are at support. What are we doing now? Maybe we're increasing in open interest and the funding is maintaining a negative value now. Okay, so funding is maybe, cross exchanges, 2 basis points negative, 3 basis points negative. So what you have is the funding negative, right? Overall, and then you get something where maybe it's price action has, maybe after you spike this low again, I'm not saying that that's required because you do have this under over. All right, so let's just go from here to use this example. Let's say that you start overtaking more recent highs, right? So the last place we were rejected from, that's telling you a story. So the market was rejected here. There was a seller there. There was a seller there, right? The buyers weren't able to win this, just consider it a local battle, right? So if price is starting to trade above previous levels that it lost, okay, what is this telling you? It's telling you that control is beginning to shift. If control is shifting down here, but funding is maintaining that negative value, it means that the people that are out of control right now or who have lost control have not maybe given up their positions to the extent that they should. Okay, so you have a bunch of potentially larger trap traders down at the low. And if it helps, one of the things that I would say to do is use a line chart. So, there's the candlestick chart that's used by time that leaves some noise behind. Then you could get into more specific periodicities that clean up based on volume or volatility. If you want, though, use a line chart. It gives you really clean structure. It shows you where the turning points were that stood out. And I think that clearly, these more recent ones stand out. So if you are, let's say that you are starting to overtake this level, this more local level. Okay, I have all my keys set up now so I could use my mouse and draw these right away, but you have to hold shift to make a straight line. If you start having something like this, I mean, how many times have you seen structures like this where what is this really? If you get something where you have a more recent low, this is your more recent pivot. Let's say we base out a little bit more. It's another more recent low. This is essentially market puked into this low. You have sort of a swing failure, right? And this is many times before this pattern has occurred in a bullish fashion afterward, right? So low, more recent high, and now we're over the high, and then you're playing back towards the the more recent highs, right? So if you have a low, there's this little inflection point right here. So just trying to draw that. Let's make it. Let's give it a little bit more room because we're going to say we want a little bit more from price. We require a little bit more confirmation for certainty, even though that means that you're not, going to capture as much. But if you're starting to base out above this prior level, okay, remember this is, you could say, all right, use this point, or how about you just consider this was clearly a little pocket of support, okay? Clearly this interaction here, clearly serving that purpose again, so extending this moving forward. Right? If you're trading above this 18.2 line, well, on balance probabilities, I would say that you're going to look at tapping that, 18.6. And then from there, right, what do you think is going to be more likely? You have the market that is sort of all eyes on charts, Michael Saylor, context, right? Similar structures to previous structures. Do you think at this point that if the market moves up here, creates this baseline spacing structure, is back at knocking at these daily lows, well, are the odds in favor that the market is at 19.4 in the days following, or back down at 17.2? I would say that, price direction is value in crypto. So, this would indicate that buyers think it's more valuable. They're more interested in this just plain supply and demand dynamics. And you would expect 19.4, right? So use the line chart if that helps. It definitely is something that smooths out the, we'll just say it smooths out the data a little bit more. In terms of local levels, you see I have a few local levels here. I have these daily lows. So this is prior daily low. This is also the range. You could say this is kind of the range low of the prior range. You gain acceptance into this, you're probably moving back up through it, right? So that's why I said, 18.65 the other day. It's this daily low area. So 18.6, 18.65. You start to form structure in there, and you're probably going back up to these highs, right? Right around 19.3, 19.4. More recently, 4-hour low. Okay, so this is something that's worth paying attention to, right? So this is starting to create this bullish structure where you have this 4-hour low, market pukes through it, but now we're treating this as support. So look for, maybe not right off of this, but look for potentially a bottom to form right around here, right? And, what would be the best case? I think that the best case is a 3 drive, because you've seen so many times before where a 3 drive has resolved favorably. I don't know how many times you get a 3 drive on a 4-hour though. So, 2 drives, it could be something that is the extent of what we get, but 3 drive would mean something like this, right? So this is a very bullish pattern when you have 3 drives into the low, or it's bearish if you have it at the high, and then upon this occurring, you're starting to trade back above a previous high, right? So if you have, if we're just going to smooth this out with some lines, let's say this is a 3 drive right here, and then the next thing you know, you're back above this high. I look for support anywhere within this sort of previous low over here extended forward. You're really just looking for something like, this to occur. So you have 3 drives into the low, and then ideally, this move, it tells a very clear story that now you're above this high, you're starting to base out again, and momentum is beginning to shift. And this is where you see like RSI divergences and momentum oscillators begin to show divergences. Just consider it like the effort that's coming in is unable to, with those 3 punches, hit that knockout punch. So good levels locally in terms of, some of the more reasonable levels that you can act off of. I think that you could make a case for getting into a position off of here with a close stop, right? The problem is, if you're taking a swing position off of here, do you want to have a close stop off of this? Because you could get that 3 drive and it would still fall within, I think, what is potentially could be expected, which is another move lower. So maybe if you're looking for a swing position off of this structure, it's this under over right here, maybe you invalidate this off of this more recent low. So, you get stopped out, right? That's part of trading. You get stopped out sometimes, and maybe then the other setup works, right? So, hey, you have to get used to getting stopped out. I'll just say that. So if you take this trade, you get stopped out, and then maybe you see this occur pretty quickly, or you could wait for that, and then, by that point, you've already, maybe you lose 1 hour here, but you've made 4 hour from, we're looking at the composite value area low of the structure. So we have 3 days now. So 3 days here, composite value area low. They're not necessarily the most balanced days, but you could tell that in terms of where price is spending the most amount of time, all right, we haven't really left by much the initial days, heavy day into the low in that range. So this was pretty symmetrical, pretty balanced, a little wonky, very balanced day. So very balanced day. So ideally, we're starting to, if you could get back above, where we are right now is it's a good fight. But if we start trading back inside of yesterday's, I would say, 8 what I drew before was around 18.2. If you're starting to trade back above this high even, that in that case, I think that you're probably going to auction back up to, 18.5, these highs up here somewhere. So again, it's not, you don't have to have perfect back-to-back days in balance to create these composites, right? So the composite is just from these 3 days, but the idea is that we're expecting value to develop over the course of this, or rather throughout this structure moving forward, okay? And this is very balanced conditions right here. I mean, the worst thing about the structure is, and it's not something that's bad really, because it's actually not a poor low, is that it's just not the most serious rejection of the low. Okay, but it doesn't have to. Remember, it's not it's not necessary that it has to clean that up and make it. Every low doesn't have to look like that, right? You've had many lows that were left behind actually, but what they do is help you sort of focus on one thing rather than waste your time looking at something that maybe doesn't stand out as much. So I think you could have a setup over here. Best setup, in my opinion, I would definitely, if we got the dump into this low again and started reclaim this low, I'd probably get aggressive on the reclaim of this low. I honestly, I would consider taking this position. If I was, actually, I might actually, hold on. Yeah, I don't know if I'm going to chase it, but oh no, wait a second. I'm actually filled to, okay, so I had limits down here, but I didn't get filled for my entire position. So the last thing I want to do is tell you everything I'm in so you guys hop in right away. But I am now partially filled. So I'm actually decently filled. So, and then the other trade opportunity I think would be, let's see, okay, so from, you're looking at ultimately, I think you get a break of these highs. It's very clear that this wants upward. So outside of this value area, I think it would be very unlikely, let's say we get a move up through here, that you just reject from here again at this point, okay? Given the way that the structure is beginning to pan out, and we're starting to see that again, the another thing to look at is that you have implied volatility dropping, and we do have sort of this, I would say, this little fear tool that begins to show, this is the 30-20 delta skew. We also refer to 25 delta skew. It's the difference between these deltas, puts and calls, implied volatility. So what we've seen more recently is that in the dips, that it has been more positive as calls have been aggressively sought after. But when we're down here, what it's saying is the market is becoming maybe a little bit more fearful. It could mean that calls are being more aggressively sold, right? So calls are being more aggressively sold, call implied volatility is dropping, put implied volatility could be staying relatively the same. But ultimately it is showing a market that is, more geared towards the downside, right? So, not more geared, but if you start to see put implied volatility trading much more rich than call implied volatility, it's just showing you that maybe the market is expecting lower prices. And again, this in isolation is not what I'm talking about just using, but when you have price that's maybe beginning to range, maybe beginning to base out, and you start to see that the market is predicting or anticipating even more and more that the lower prices are sort of maybe to be expected in the near term, it just gives you an idea that maybe they're getting off sides at that point, directionally by using puts. Obviously, there's a dynamic that occurs between options writers, options sellers, so it's not that one-sided. What we did have was a big expiration today, so this morning. Now, in terms of in terms of our open interest now, it's around 16,000 is the highest open interest strike. So, if you have, and if this is, clearly, I would imagine a lot of this is your puts. So, if you're a market mate, if you're an options writer, if you wrote those 16,000 strike puts, and those expire on December 25th, December 18th, you don't want these to expire in the money, right? So I don't know if, I think max pain is probably slightly higher than that, which is, the max pain area is where the market, punishes the most amount of options the most amount of people that are long options, right? So where it doesn't allow them to expire favorably. So right now that is the highest by strike, and we have up until the end of December, so Christmas actually. The pink gray dashboard, this is Genesis Volatility. I featured their stuff plenty of times before. I don't work with them, but I have gone back and forth with Greg and Brandon. They're great guys. They put together a great platform, and I said I would be happy to show it off. I get a nice little free membership, but I don't have any kind of other affiliation with them. But this is a great platform compared to Skew, which is $700 a month. This is like $70 a month, and this has just fantastic analytics. If you're trading options, even if you're trading futures, it doesn't matter, because a lot of the stuff that we can get from this, we get a ton of information in terms of activity, right? So I could look at realized volatility by day of the week. So again, get an idea of maybe when the best time is. Now I'm looking at my other screen because I'm thinking, all right, I got filled for that. Not paying attention enough to the chart, I guess. But this is something that I think that, so whenever I'm talking to you guys on the YouTube, there is a degree of, obviously, there's a different degree of risk that I take than you. So I just have to always be mindful of that, because when I am saying what levels I think are important, I more often than not will be willing to get involved with a little bit more risk, a little bit less certainty for certain positions. But now I'm looking at this, and this is actually looking kind of decent. So happy I have that. But this is going to tell you, so we could go, let's see for the last month, right? Let's look at the last month, realized volatility by hour of the day and by day of the week. Okay, so what stands out to you over the last month? Okay, so Sundays and Saturdays, realized volatility is the lowest. Okay, the highest is on Thursdays. Is sort of this, well, it's only 5 of the days of the week, so go figure it's a day that ends on Y, right? I was about to say the highest is between Monday and Friday. Well, no shit. But this shows you Saturdays, Sundays. Okay, we go back, let's see what the realized volatility for the last year was, or year to date. Okay, it's going to show you that weekends, Saturdays, and Sundays are still low. Okay, in this case, Tuesdays was slightly less than, year to date. But Saturday, again, thin day, right? Not a lot of activity. And then this is going to show you by the UTC hour of the day, right? So when do I want to get involved, or when do I want to be most present? This is very helpful. Okay, one day it would be great if you could, without revealing too much, explain a little bit of the setup in Exo charts. Yeah, Julian, I've gone over this in BlockRoots. BlockRoots members get access to this. So if you want to join BlockRoots, BlockRoots.com. I don't give away too much. I don't give away too much on the YouTube. And even to BlockRoots, most of the stuff is the more mechanical setups. I definitely, I guess I've said this statement to someone before who said, hey, could you share one of your edges, or I'd be glad to share some of what are mechanical setups, but those are really readily available to anyone who's willing to do the work. But the more nuanced alpha and edges is stuff that I would never share. Absolutely not. And that's sort of just trader code, right? But if you're interested in learning these setups from a sort of zoomed out standpoint without the finer details, you could go to blockroots.com. And our new BlockRoots website is going to be up ideally in the next. It's up, but it needs some modification to it. So it is up, but all the members that are going to be porting over are already members of BlockRoots, so they don't really need to go onto it yet. Okay. Oh, if you can't get your TPO charts as clean as mine, by all means, I'd be happy to. So this is my setting is a tick 20, and this is the 30-minute, right? And some people use a 40 tick, so you could set this to a 40 tick, right? So now it's a 40 tick, and some people use this, right? Yeah, I have. If you want to DM me on Twitter, I could go ahead and send you the file for the import. Okay, do they have futures? No, they don't have futures data. They don't have, but they have perpetual. So this right here, okay, index and perpetual, but they don't have any. They don't have like futures term structure yet, but they are. I know that they said that they are doing that, right? So they definitely they plan on doing that. Can the course material on your site be applied to? Yes, yes. So the course material on the site, all with regard to how this is traded, is exactly how I was trading the E-mini and how I was trading the ES and crude oil. Obviously, there's like that's kind of a silly statement to say because it's not exact, but using these tools, you change around the details, obviously. Using these tools, yeah, and the same theory, absolutely. That was one approach though, because I also had a completely different approach when it came to traditional markets as well that I implemented. Okay. Give away your edge. No. So traders are going to have many edges. And one of the best edges you need to work on, obviously, is your discretionary edge. So your edge in being able to, and I just simplify this, to be able to stop yourself from making dumb mistakes. So that's the first edge you need to master. Okay, so 30 ticks, price is so high up. Yeah, you know what? So after I said you could, so Stan, to be honest, after I said you could switch to 40, I was thinking, I think I switched it to 40 recently and I didn't save the template. So if you have it at 30, you could, honestly, guys, it's a lot of this stuff is, it's not going to change too much, right? It's going to, from 40 to 20, it's a matter of aesthetic almost. So yeah, because what you're looking at still with the TPO is a 30-minute rotation size. So, all right. 40 tick relates to time. Now the 30-minute relates to the time of the rotations. So, yeah, all right. So let's take a look at if you guys want to throw up some charts. So, what I want to talk about. So MicroStrategy. Okay, so MicroStrategy, what are they doing? Let's go to my page. Completes $650 million offering of 75 basis point convertible debt senior notes due 2025. So it's like a 5-year note, right? So many ways that companies can go about raising money. They could issue equity, issue stock, right? They could raise debt. Okay, debt, bonds. You think about it in the same terms. So what they are doing is pretty interesting. Okay, so MicroStrategy. A lot of companies like Apple, Amazon, we'll just reference those. They have a debt to equity ratio of, I think, like 1 or 1.2 or maybe even slightly higher than that. MicroStrategy's debt to equity ratio was like barely anything. Okay, so if you think about debt to equity ratio, it's for each dollar of equity, how much dollar of a debt do you have, right? So if you have a company that has a just think about a company that has $1, they have a debt to equity ratio of, we'll say, 2, all right, which means 200%, right? That means that for their $1, and this is loose, right? This is not precise. So for $1 of equity, they have $2 of debt, right? So for every $1 of equity, $2 of debt. So MicroStrategy, barely any debt. Really, you have to have debt to some degree. You don't want to have too little debt, right? You definitely don't want to have too much debt, but there's a lot of companies right now that are raising debt. Now, MicroStrategy said no more cash, okay? Our reserves now, what we consider as cash, are now, it's Bitcoin. So that's their mandate. No cash, Bitcoin, okay? So, normally if a company raises debt, it's going to be for cash, okay? So right now, or as it was, MicroStrategy's debt to equity ratio was incredibly low, all right? So you could actually see, if you go to this chart, you could see their debt to equity ratio. And for the longest time, and it says, from MicroStrategy debt to equity ratio for 3 months ending September 30th was 0, right? Now we get we look at their more recent debt to equity ratio, 0.39, right? So this is something that was very low. Now they have issued more debt. So let's say, and I think we all in this chat believe that, and now they're at a debt to equity ratio that's still healthy, right? You could say they're barely leveraged, right? If they put it in those terms, they're barely leveraged, all right? So let's say that Bitcoin goes up 2 times, right? 2 times, 3 times, 4 times, whatever, it doesn't matter. Their equity in relation to their debt is going to improve. Their debt to equity ratio again is going to drop. So at that point, MicroStrategy's mandate is to have to have Bitcoin instead of cash. Do they just consider, and I think that they, excuse me, not do they consider, do they just continue to say, all right, low debt to equity ratio, now when we raise again, we're raising and we're buying Bitcoin? Does this create this sort of feedback loop that acts as like this Bitcoin machine, right? It's this engine that's built on Bitcoin that while it buys Bitcoin to put on as cash, it is buying a finite supply asset that there's not a whole lot left of, and it's raising the price, ultimately driving up its equity as well, driving up the value of what it has on its books, and then constantly improving this. Obviously, at some point, it comes to the point where the price of Bitcoin is going to be so high if this situation sort of persisted uninterrupted. But it's really interesting, right? What a crazy move. And people, when I was talking on Twitter a while back and I was saying, Michael Saylor's become the face of Bitcoin, that's like kind of silly. I didn't mean like he shouldn't be and it's unfair, crypto Twitter should be. That's not what I meant. I meant, okay, there are some OGs who should be really recognized as being the pioneers, okay? Definitely should be recognized, definitely have been recognized. But MicroStrategy, it was kind of irrelevant before all this. It's not the same as Square getting involved. It's not the same as like if Apple got involved, it'd be fucking insane. But it's not this crazy big company that you were looking to for long-term growth to begin with. So it's huge because it's a major whale though, right? And this has market impact. You cannot go buy $650 million of an asset, let alone an asset like Bitcoin, and not expect to have some market impact, especially when your method of buying is, you're not going to buy this. They're not going to buy this on OTC, right? They are, maybe they can get some, but if they continue to TWAP, they're market buying, in increments of time. But this is going to have a meaningful material effect on price. It'll raise price, and I don't think that this is priced in at all, okay? Because again, this market is not efficient. People think like, oh, see, nothing happened in the first 5 split seconds after something gets released. Traditional markets are extremely, I don't want to say, they're efficient, right? But they're not perfectly efficient, but they're more efficient than crypto, right? There's this whole argument between, the efficient market hypothesis. If you read like A Random Walk Down Wall Street, the whole book, I'm pretty sure it was that. I should know. Was on that. But it might be Eugene Fama. I can't think of who's behind the efficient market hypothesis. But this is not priced in. He's going to be taking this off of the market, and that is going to have a meaningful effect on the overall supply, right? He's taking supply off the market. It's a very reflexive asset. Now, this again is massive, right? This is someone who is a big figure and who probably will create this loop from other people now just seeing him do it and feel like, oh God, there's only so much left and we want to get our allocation too. And I said, an insurance company, $100 million worth of Bitcoin, that is absolutely insane. That's like an actuaries, insurance, same thing basically, or same sort of mix. But this is massive, right? So I don't think that it's really smart to be bearish right now, right? And still beat the, like, we're going to have a 12,000, 13,000 correction. It's just you're fading this kind of person and they're not in the market yet, right? So that is something that is just absolutely mind-boggling. Speaks about their stand on BTC. Fiscal policy makes sense. Yeah. Okay. Okay. And also, does your course help with trade management? For me, management has been the hardest aspect. Yeah, we have the sort of the stuff you need to work off of for trade management. Excuse me while I have my wife bought these chocolate kisses that are they're like graham cracker flavor. Trade management, yeah, we have the roadmaps for the basics, and we go into some of the more important things that you need to know. But listen, like at some point you're going to learn all of these things from somebody. They're all kind of like curated from one. Everything is learned from someone else. Like, I'm not creating the course on risk management. I'm sort of I did create it, but it's all curated, right? I learned this from someone else, okay? I learned this from experience. They learned it from someone else. So ideally, you go to someone who is able to teach this in an effective manner. Okay. Um, Two, it comes down to you, right? It comes down to the person who is actually pulling the trigger, all right, or choosing not to. So what I say with trade management is read books on behavioral psychology, read books on, anything decision making wise, right? Read poker books, read, you get the idea. It's going to come down to you, right? Being able to manage your trades. The last person that's responsible at that point, or the buck stops there. So yeah, I'm trying to chew this chocolate. It's good. Coinbase trying not to have traders whale buys like this. Okay, their case study brags about not impacting price using rate. Yeah, it's Doug. It's called a TWAP, time weighted average price. TWAPs are good when the market is relatively thick, when there's enough liquidity, because the idea is you're going to cause a certain amount of market impact, but over time, depending on, obviously this is dependent on conditions, because in thin markets you wouldn't want a TWAP, but that's why they're TWAPing during optimal trading hours. So New York Open, midday, week. They're not doing this on the weekends. But yeah, it does have the minimal impact on price, but minimal impact on price short term. It tries to have that, but overall it's pulling the supply off the market, and then you're creating that feedback loop from people that now know that is kind of an underlying force in the water and are going to front run that. And this is why in traditional markets, if for trend followers, paying attention to things like volume, paying attention to things like relative volume are really important, because you could actually front run big players getting into big equity positions if you know what to look for, because they take, big ships turn slowly kind of thing, right? To get into a position, it takes a long time. So you get to pick up on the subtle details that stand out when someone is getting in the market. In crypto, it is so crazy that there's so many unbelievers still that you think, well, how could this be? How are they going to tell us this? Well, this is such a small pocket in the investable universe that they're really telling a few people when you think about it, okay? There's still the rest of the world that doesn't, it's not, I don't want to use vague terms like that. There's still the whole, there's still a big group of people, a larger group of people that don't believe in Bitcoin than there are that do, okay? So they're still looking at this and they're like, whatever. We're looking at it like that's amazing, right? Mental game of poker, cool. There's a lot of things to read with trading that are not trading related, right? Read what's it called? Prisoner's Dilemma on game theory. Read Thinking Fast and Slow. Read Thinking in Bets by Annie Duke or Annie Hall. Read read The Misbehavior of Markets. Read, what's another good book that is not necessarily trading? It is, I would say, read The Black Swan by Nassim Taleb. I keep a lot of my trading books above me in this office. I have a bookcase with all of my books in a separate room. But usually I have something good that I can recommend around. Right now I'm reading the one that we shared in the last live stream. Market Liquidity, I think it's called. Emotional Intelligence 2.0. I have that on audiobook. I was going to say I read that, but I listened to that on audiobook a while back. If that's the same one I'm thinking of, hold on one second. I don't want to sound like a fucking storyteller. Let's see. I have such a big Audible, but I don't like Audible because I really like owning a book. I really like owning a book because I like gifting books. I really like owning a book because I just like having the physical copy. There's something about writing with your hand and reading an actual book. Where is this? Let's see. Wow, I have so many that I need to re-download. So recently I was listening to and reading Devil Take the Hindmost. Let's see what else we have. Nick Bostrom's Superintelligence. All right, where is this? The Brain That Changes Itself. I'm trying to find if that's the one I read. The one you were just talking about. Emotional Intelligence 2.0. Travis Bradberry, Gene Graves. Yeah. Didn't read it, excuse me. Listened. A lot of books like that, though. Okay, so anyone want to take a look at any charts? All right, position's looking good. Position is looking good. And just to show you guys I'm not fucking LARPing. Let's pull this onto the screen. Okay. You see? You see? All right. Okay, so I have 250,000 contracts filled, and the average price looks like 17,998, and then I have more contracts down at 17,845, and then yeah, that's that. Those will cut if we get too into the low, and then I'll reestablish if we retake the low. So looking good right now. We're up decently, decent size though. Yeah, so that's always that was like the one thing that I was hesitant about doing the live streams is like there's so many crypto bullshitters out there. I want to figure out a way to trade during the live stream, not give too much away though. As far as like OPSEC, not show too many. I don't want to this happened before too, guys, where I accidentally was like in a stream and like showed it might have been my user ID or it might have been my email address, and I'm thinking, oh fuck, like I don't know what the extent of what someone can do is, but I don't like that. So I want to trade on stream, but I don't want to fuck something up and make a mistake. So I've done it in privately in BlockRoots, but the last thing I also want to do is talk about it and not, and maybe it's just there's so many people on YouTube that don't actually fucking trade. So yes, I do trade with a reasonable amount of size, and yeah, all the trades I'm taking, I'm probably taking. If I share a trade on Twitter, I'm probably by the time I update you, I've already been in and out of like 3 or 4 trades. So yeah. All right. Okay. So let's. Yeah. So I am long. Yep. I'm long 250,000 contracts right now. I don't really use any leverage either, guys. So I have a good amount on this account. I mean, I have obviously it's using cross margin, but it's not really. I don't trade with like people. So you can tell when when someone does not know what they're talking about with trading. They're like, how much leverage do you use? And I'm like, I don't know, however much gets me to my position size that I'm normally trading with. So people think of leverage as in terms of increased exposure, right? As if I have, let's say I'm trading with 250 to 500,000 contract positions, and then they think like, are you using 10x leverage to make that a 5 million contract position? No fucking way. No, like I'll trade with the money I have. So, and this is like still reasonable size. It's not anything that I would say is big, really big for me. So yeah, so let's look at some charts, guys. Throw some charts up. All right, so I like BTC the way it is sitting right now, and this is not something that I'm actually worried about, even if it starts coming against me, right? I'm looking to have, based on the remainder of my fill, what I'm looking at is this area in general maintaining. This is how I trade, right? I try to be as cold and calculated as possible. If you saw that trade I'm in. If that nukes, I'm out. If it does this and comes back up again, I'm in. Just take the loss, and it is what it is. I think in the last 8 trades in the last since yesterday, my hit rate is 100%. As crazy as that sounds. As crazy as that sounds. But that's not that nuts because you go on streaks. And these are, so 7 of those, besides this one, were all scalps. So, a lot of the times you get away with that. Yeah, David. So each contract in BTC is $1. Okay, so let's look at, everything's kind of crapping, honestly. Not too happy about SNX, not too happy about Aave, but, I got out of SNX a couple times. I haven't changed my Aave, though. All right, it's pretty adamant about that. I don't think that, I think that, hey, these are going to continue, these blue chip DeFis are going to continue to follow BTC. I would be remiss if I said in the same sentence that I thought BTC was going to be higher in 6 months, and then by me saying or acknowledging that this relationship exists, that these were not going to be as well. So I'm managing this less, I guess less strictly, And I don't often do this, and anyone knows me knows that like I rarely, I hear a noise behind me. Sounds like my one of my cats. My cat um, is I don't know, breathing behind me or something. But I don't want to overly manage these because I do really believe in Aave. SNX is something that I think is a good trade to use Aave as a proxy for, similar to Wi-Fi. So SNX, Aave, not going to mess around with these too much. I'm also in Haka, so I got into Haka. Small play, nothing serious. About as small as my sushi play that I got in, that I was in over a week ago, where I got made fun of this and then it went up 100%. But I didn't get out at 100%. I think I got out at I think I sold at maybe 56%. So, I'm not going to sit here and say it went up 100%, so I sold it. And I sold it at 56% or like 54. It doesn't matter either way. So ETH, though, I want to pay attention to ETH and BTC. I think Link is kind of shot. But ETH, the thing about ETH that I like about ETH is that I think that ETH is going to follow BTC, no matter who you are in the space. Doesn't matter if some people will be maxis, but I think that these are, one is a high beta play on the other. ETH is a higher beta play on BTC. ETH is closer to its more recent structural levels on the higher time frame, so I like that. This is also, has this bearish throwback, this retest of previous market structure. So doing the same thing that BTC is doing, right? But a little bit, I'd say it's holding up a little bit more, but overall it's a little bit more compact. If you look at BTC, it's not as close to its more previous daily close, right? So that daily swing low right here, which again I said is sort of like a micro swing low. It's not the most significant one, but we're a little bit more extended from that with BTC compared to ETH. And ETH against BTC, it's not, it's definitely, in terms of the last few hours, it's the weaker pair. But in the last few days, it hasn't done much besides range, so it's kind of holding its value with Bitcoin, which is good. And you want to see that, right? The market is going to do this for a long time. If the market gets to 50K, if it gets to 100K, if it gets to 30K, it's going to have multiple periods where we spend a week, 2 weeks just going, we're maintaining confidence. If we see these signs, and if that might repeat very often, right? Where you get people constantly the idea, is that you're going to have multiple corrections in the market. They're all going to feel really shitty. They're all really going to make you second guess your position. But unless a major change happens, the benefit of trend following is that you're not going to be meddling with things too much. All right, position's looking good. Position is looking good. See, that's why I didn't want to look at my position either. It's either one or the other, guys. If I look at the stream, I forget what's going on the chart. If I look at my position, I'm going to start looking at this, and I'm not messing with this in terms of this is not something that I'm looking at the footprint for, really. So this is not where I'm going to be micromanaging it on this chart. I think that we do have a reasonable case for support to develop over and around this area. So, I could even, I change my mind all the time. I could start adding even into this low versus stopping out and waiting for a reclaim. So we'll see, right? I take more risk for certain setups. So, what time? That's not a scalp. That's not a scalp X factor. Hey Ryan, long way less contracts. All right, Carlos, it's all good, man. Oh, the dog is howling. All the altcoin action is on Uniswap. Yeah, a lot of it is on Uniswap. So this list right here, DeFi, is a lot of the stuff that I would be interested in. I'm not interested in getting in Uniswap things that are, if I'm looking at a DeFi pair, Gecko, I'm looking at this first. So we'll go to DeFi. Someone says a random pair. They say, dude, you got to check out, I'm looking for a low market cap too, because that's a lot of the lore. Oh, you got to check out Dodo, dude. It's awesome. Okay. Let me see if I want to check out Dodo. Oh my God, this is the worst example ever. It's sort of just an exaggerated example. I don't even like this. So what I would do immediately is go check the 2% depth, upside, downside, right? So here's your, bid, here's your ask, here's your depth, right? Okay, stacked, stacked. What this is showing me is that 2% up, 2% down, there is nothing there, right? So there's a lot of slippage. This is a terrible example. It's got $46,000 in volume. Let's go to something that's more, middle ground that maybe I would look at and say, okay, DX Dow, 7 million market cap. Okay, this is 2% depth of 4 grand, right? So I feel like for me, sometimes my time is better spent somewhere else rather than throwing, for something like this, I'll throw some money at it, but it's not like I'm not gonna sit there and try to manage a position that has this little depth. I'll punt this ideally for a swing, right? A hope, hope and pray position. But this is what a lot of this is how I'm largely going to be deciding what I'm really going to be actively trading if it's on Uniswap or DeFi. Unless it has a narrative, unless I have some other market color. Market color is a term that's used to describe what's going on in the market beyond just the chart and not inside information, right? So some kind of, it's not inside information, but some kind of, I guess, valuable, I'd say actionable insight from a good source, right? So market color. And there's more to it than that, right? When we go over order flow and all of the things that are taking place in the futures market and between some specific buyers and sellers, that is to a degree market color. Okay. MXC. Yeah. MXC. What did I also just see that is an exchange? Is it MXC or did I just have that open? One sec. Is that what you just MXC, or did I just have that one open? I can't remember which one it was. Oh, MC Dex. That's an exchange. Should we trade these like Ocean, Aave, or buy and hold? I bought, I watched a drop in Ocean, now doubting the hype. Well, Mark, I don't know about Ocean. I think let's see. I've been asked about Ocean multiple times now. I've charted Ocean. I know I've charted for you guys because we have this line in the chart still. And that's got to be a weekly line. No, that's just, what is this? Guess it was the more recent levels of confluence from the prior range. Either way. No, I wouldn't want any part of this right now. I wouldn't. So the way that I've gone over alts in the past is, and I know I've said this for many things that look similarly, if you asked me to chart it and it was back here, I would have said, guys, sorry. Like the opportunity was back on the first retest. Being patient back here was where the opportunity is. Now you're returning back there. You're just asking for trouble. You're asking for like these like special tailwinds that alts just generally don't have, right? Across the board, like with exception to specific special ones. But this right now is back within a prior range that was stuck within from September to October. So accepted back here, you're probably looking back down at this low, right? I wouldn't want any part of this unless it was back up here. So I wouldn't expect much from this. It's an exchange on, oh, okay. How does cross margin work? So cross margin uses your capital that you have on the exchange versus isolated margin, where you can actually isolate a specific amount of margin for the position. So if I am in a cross margin position and I have all my money exposed into BTC, my position is going to draw from that BTC that's not necessarily in the position as the position fluctuates. It's going to use that as margin. And the problem with this is you could technically liquidate your portfolio if you have all of your money. If you're trading a BTC perpetual and you have the Bitcoin exposed on the exchange, right, you're using that entire Bitcoin essentially at times you can. So isolated margin means I'm saying, I want to open up a position, but I only want to make sure that it only uses this much of my BTC to use as collateral. So what happens is you're applying a specific amount of leverage to an isolated portion of margin, and then therefore if you get liquidated, it only is going to liquidate that portion, right? You're only going to use that portion of the capital as margin. I like cross margin. I've used cross margin, but cross margin you just have to be careful. So some people, a lot of people who use like high amounts of leverage, they will use isolated margin. They'll open like 100 leverage long with isolated margin, and their margin can be, or their margin liquidation can be their stop, right? So they don't have to worry about, they turn their liquidation into their stop, right? So this works sometimes if you're around a good area of structure that falls within how you define your position or where you put your risk or where you rather exit your trades. Then you can do that. I wouldn't say like, I don't like to advise things like that. You could get creative in so many ways that I don't think are advisable to the beginner trader. I should be getting liquidated. This is a really good, so far I got a nice little move on this. Want to hang on and add. We'll see. We'll leave this. All right, so anyway, does anyone have you ever experimented with automated your trading? Yeah, I actually had an automated systematic strategy running for a little while, and great in test, just was not completely, I think that I was not completely ready to devote myself to it, so I was kind of halfway getting into it, and then I ended up taking some nice drawdowns with it, and I thought, why the fuck am I even wasting this money? I think I posted this on Twitter. I took like it was like, I think a 22K drawdown, and I thought, it might have been 22 or 26, and I thought, this is like, I see that this is looks like a successful system, but I'm not really focusing on too much. I stepped away from my Python that I was practicing at the time. This wasn't through Python, but I just thought, all right, so I'm not completely dedicated to this right now. Why am I wasting the money in the experiment when I could trade perfectly with, not perfectly, but exceptionally by just doing it discretionarily? But absolutely believe in a place for automated trading. I'm going to get into that more. I'm going to get into that soon because I am going to be sitting as an advisor for one of the automated trading companies in the space that I think is a really good company, and I'm helping them out. So if you're in crypto and haven't blown an account on 20x leverage, then you haven't lived. No, I don't think I've ever been liquidated in crypto, and I would never say that on Twitter because I think you just get hate and people would be like, that's fucking bullshit. I don't think that I've ever been liquidated. Never like a liquidation that was, so let me rephrase that. I've never been liquidated where I've been like, oh my God, I got liquidated. I've turned trades, liquidations into stops. So I've never been on the wrong end of a email, but mind you, I came into crypto trading traditional markets. If you are trading this long, you better have fucking mastered risk management. No one who comes from trading something like, equity derivatives or trading, whether you're just trading equities, your career trading equities, or you're trading the indices, the index futures, index futures. I always fuck that one up. Index futures, whether you're trading any product. If you've been doing that professionally, if you've been doing that on the side, it doesn't matter. If you've been doing that for a really long time and then you came to crypto, there's really no excuse for you to ever have gotten liquidated by accident. You should know how all things work at that point, right? And maybe, maybe that's false, because maybe you have this sort of moral hazard, or I don't know if we call it moral hazard, but in crypto there is no margin call, right? So an exchange in crypto cannot sue you. They cannot put a lien on your house. They cannot come after you if you're not going to, the exchanges are set up so you can't, excuse me. So you're never going to owe the exchange money, right? But in traditional markets, you have a completely different dynamic with how margin works, how collateral works, and so I don't think you should ever be liquidated, honestly. But it totally makes sense when you think of most people in crypto. It totally makes sense. Like, my biggest fears, and we're going to wrap this up soon. I had fear when I came in the crypto market. It wasn't the same kind of fear that other people had. It was fear of like the unknown, right? I remember the first time I traded on BitMEX. I was trading on BitMEX for a really long time. I remember all the feelings of, are you allowed to say this? Am I allowed to say this? I would get in a lot of trouble. Should I advertise that I trade on BitMEX because I had a New York location in my Twitter? Like, is that bad? And then I remember thinking, depositing money and being really worried, like, are they going to take it? Is something going to go wrong? Like, counterparty risk, all the things with regard to counterparty risk. And Yeah, it's funny. Um, the sigma of altitudes takes people by surprise. Still, I think the sigma. You mean like the crazy moves in terms of standard deviation? Yeah, you don't need to trade alts on futures. Oh my God, that's the craziest thing. I mean, I trade perpetual swaps with alts, so I can't sit here and really, it's like the pot calling the kettle black. But you don't need to. There are times. So actually, I should just rephrase this. I trade alts on perpetual swaps because of the availability, right? I A lot of this stuff it's hard for me to trade or have access to. The spot markets, like I could go on to the volatility. Great. So great use of the word sigma, Kilgore. Um, a lot of the alts that I used to have a Binance account. I got the email. I could deposit a certain amount. I don't like the restrictions about how much I could pull off. I remember doing the math once when I was on FTX and I had a lot of money on FTX and I had uh, racked up quite an account, and then I was doing the mental math of like, how long would it take me to take this off the exchange? And I was like, this is gonna fucking take not to get into too much, but I was like, this is annoying. I'm sure I could talk to Sam and work that out. But uh, I'll go on to a non KYC exchange. They have perpetuals for alts now, so I end up trading those for that reason. The problem with trading an alt is the benefit of rather trading an alt is it is like a spot alt. When you have a good setup, they are very technical. Um, if you find a correlation pair, you have a great opportunity off of that alone, right? That relationship existing. You have something to show for it after, which is the trouble for many because they have a bag and they feel like, oh, I have this forever. I'm not going to let it go. But with a perpetual swap, you don't, right? It's just a derivative. So, um, but yeah, guys, I think it's how long we've been doing this for. Been doing this for like an hour and 22 minutes. If you don't have any other questions, I think we covered what I wanted to cover. Let's refresh this. All right. Bybit's USDT margin futures, margin perpetuals are going negative. Don't mind this XRP funding. I pointed that out to show you that if you're shorting this right now, you can get liquidated. This is not like, I don't think that this is a short squeeze you want to try to take advantage of. This is more than likely due to, I believe there was some sort of airdrop, and this is essentially a hedge then because you could hold I'm pretty sure. I think if you held XRP, there's an airdrop, and then this makes sense because let's say you hold spot XRP and you want to lock in the value of that, you could just go short it on futures. So you could short one for one, so you're delta neutral. So and then you don't have to worry about your portfolio value going down, or you won't go up either. But you get that airdrop, you lock that in. Bang. Great job with the question right away. I don't know enough about the airdrop. I could just tell you why I would do this. If I was getting an XRP airdrop, if I own spot XRP, what would I do to lock in the value of my XRP? I would go short it one for one on a futures contract to lock it in. So yeah. Thanks, guys. You have a fantastic weekend. I really like doing these, honestly. I got to tell you. I don't have an ulterior motive to do these. I hate honestly saying that you have to like and do the and do the subscribe thing. This is a good hour and a half of my day, and what is there? 168 hours in a week. I think you could spare for other people, and take this right now is my advice to you. I'm giving you advice. Time like this right now, I think you definitely spare time for other people. So, yeah, everyone have a great weekend, and I will see you on Monday.